direct and variable. Meals for patient, direct and variable. Nurses' salaries, indirect and fixed. Parking maintenance, indirect and fixed. Security, indirect and fixed. ഇതൊക്കെ എന്താ ഒരു ഹോസ്പിറ്റലിനെ സംബന്ധിച്ചുള്ള കാര്യങ്ങളാണ്. ക്വസ്റ്റ്യൻ നമ്പർ 2, കോസ്റ്റ് യൂണിറ്റ്സ് ആയിട്ട് ഇതിൻ്റെ യൂണിറ്റ് ഓഫ് കോസ്റ്റുകൾ ഡിവൈഡ് ചെയ്യാം. ഹോസ്പിറ്റൽ, പേഷ്യൻ്റ് പെർ ഡേ, റൂം പെർ ഡേ or per bed or per operation, etc. Electricity supply services, kWh, that is kilowatt hour. Cinema, per ticket. Canteen, per item, per meal, etc. Hotel, guest days or room days. Chapter 7, process costing. How will you treat normal loss, abnormal loss and abnormal gain in the process costing? Treatment of normal loss in cost accounts. The cost of normal process loss in practice is absorbed by good units produced under the process. The amount realized by the sale of normal process loss units should be credited to the process account. Treatment of abnormal loss in cost accounts. The cost of abnormal process loss unit is equal to the cost of a good unit. The total cost of a abnormal process loss is credited to the process account from which it arises. Cost of abnormal process loss is not treated as part of the cost of the product. In fact, the total cost of abnormal process loss is debited to costing P&L account. Treatment of abnormal gain in cost accounts. The process account under which abnormal gain arises is debited with the abnormal gain and credited to the abnormal gain account, which will be closed by transferring to the costing P&L account. The cost of abnormal gain is computed on the basis of normal production. What is inter-process profit? State its advantages and disadvantages. Inter-process profit. To control cost and to measure performance, different processes within an organization are designated as separate profit centers. In this type of organizational structure, the output of one process is transferred to the next process, not at cost but at market value or cost plus a percentage of profit. The difference between cost and the transfer price is known as inter-process profits. Advantages. Comparison between the cost of output and its market price at the stage of completion is facilitated. Each process is made to stand by itself as to the profitability. Disadvantages. The use of inter-process profits involves complication. The system shows profit which are not realized because of stock not sold out. Chapter 8, joint product by product. Question number 1. How apportionment of joint cost up to the point of separation amongst the joint products using market value of at the point of separation and net realizable value method is done. Discuss. Apportionment. Market value at the point of separation. This method is used for apportionment of joint cost to joint products up to the split off point. It is difficult to apply in market value of product at the point of separation is not available. It is useful method where further processing costs are incurred disproportionately. Net realizable value method. From the sale value of joint products at finished stage, the following are deducted. Estimated profit margins, selling and distribution expenses if any, post split of cost. The resultant figure so obtained is known as net realizable value of joint products. Joint costs are apportioned in the ratio of net realizable value. Question number 2. Discuss the treatment of byproduct cost in cost accounting when they are of small total value. Answer. When the byproducts are of small total value, the amount realized from their sale may be dealt in any of the following two ways. The sale value of the byproducts may be credited to the costing P&L account and no credit be given to cost accounts. The credit to the costing P&L account here is treated either as miscellaneous income or as additional sales value. The sale proceeds of the byproduct may be treated as deductions from the total cost. The sale proceeds in fact should be deducted either from production cost or from the cost of sales. Chapter 9, unit cost, batch costing. Question number 1. In batch costing, state how is EBQ determined. EBQ means economic batch quantity. It is same as EOQ. The economic batch size or economic batch quantity may be determined by calculating the total cost of for a series of possible batch sizes and checking which batch size gives the minimum cost. The objective here being to determine the production lot, that is batch size, that optimizes on both setup and inventory holding costs formula. The mathematical formula usually used for it is determined as follows. EBQ equal to root of 2 ds divided by C. D equal to annual demand for the product, S equal to setting up cost for the project, the batch, C equal to carrying cost per unit of production. Chapter 11, standard costing. Discuss briefly some of the criticisms which may be leveled up against the standard costing system. Criticism. Variation in price. One of the chief problems faced in the operation of the standard costing system is the precise estimation of likely prices or rate to be paid. The variability of prices is so great that even actual prices are not necessarily adequately representative of cost. But the use of sophisticated forecasting techniques should be able to cover the price fluctuation to some extent. Besides, the system provides for isolating uncontrollable variances arising from variations to be dealt with separately. Next one, varying levels of output. If the standard level of output set for predetermination of standard cost is not achieved, the standard costs are said to be not realized. However, the statement that the capacity utilization cannot be precisely estimated for absorption of overheads may be true only in some industries of jobbing type. In vast majority of industries, use of forecasting techniques, market research, etc. help to estimate the output with reasonable accuracy, and thus the variation is unlikely to be very large. Prime cost will not be affected by such variation, and moreover, variance analysis helps to measure the effects of idle time. Changing standard of technology. In case of industries that have frequent technological changes affecting the conditions of production, standard costing may not be suitable. This criticism does not affect the system of standard costing. Cost reduction and cost control is a cardinal feature of standard costing because standards once set do not always remain stable, they have to be revised. Attitude of technical people. Technical people are accustomed to think standards as physical standards, and therefore they will be misled by standard cost. Since technical people can be educated to adapt themselves to the system through orientation courses, it is not an uninsurmountable difficulty. Mix of products. Standard costing presupposes a predetermined combination of products both in variety and quantity. The mixture of materials used in manufacture the products may vary in the long run. But since the standard costs are set normally for a short period, such changes can be taken care of the revision of standards. Level of performance. Standards may either too strict or too liberal because they may be based on A. Theoretical maximum efficiency, B. Attainable good performance, or C. Average past performance. To overcome this difficulty, management should give thought to the selection of a suitable type of standard. The type of standard most effective in the control of cost is one which represents an attainable level of good performance. Fixation of standards may be costly. It may require high order of skill and competency. Small concerns therefore feel difficult in the operation of such a system. Question number 2. Discuss the controllable and uncontrollable variances. Controllable and uncontrollable both. The purpose of standard costing reports is to investigate the reasons for significant variances so as to identify the problems and take corrective action. Variances are broadly of two types, namely controllable and uncontrollable. Controllable variances are those which can be controlled by the department heads, whereas the uncontrollable variances are those which are beyond their control. Responsibility centers are answerable for all adverse variances which are controllable and are appreciated for favorable variances. Controllability is a subjective matter and varies from situation to situation. If the uncontrollable variances are of significant nature and are persistent, the standard may need revision. Chapter 12, Marginal Costing. Question number 1. Explain the difference between product cost and period cost. Product cost. Product costs are those costs that are identified with the goods purchased or produced for resale. In a manufacturing organization, they are attached to the product and that are included in the inventory valuation for finished goods or for incomplete goods. Product cost is also known as invariable cost. Under absorption costing method, it includes direct material, direct labor, direct expenses, directly attributable cost, variable and non-variable, and other production manufacturing overheads. Under marginal costing method, product cost includes all variable production cost and that all fixed costs are deducted from the contribution. Period cost. Period costs are the costs which are not assigned to the products but are charged as expense against the revenue of the period in which they are incurred. General administration, marketing, selling and distribution overheads are recognized as period cost. Chapter 13, Budgetary Control. Define budget manual. What are the salient features of budget manual? Budgetary control is the second most important chapter for theory perspective. Budget manual. The budget manual is a booklet specifying the objectives of an organization in relation to its strategy. The budget is made to decide how much an organization would earn and spend and in what manner. In the budget, the organization sets its priorities too. Effective budgetary planning relies on the provision of adequate information to the individuals involved in the planning process. Many of these information needs are contained in the budget manual. A budget manual is a collection of documents that contains key information for those involved in the planning process. CIMA London defines budget manual as a document which sets out the responsibilities of the persons engaged in the routines of and the forms and records required for budgetary control. Contents of a budget manual. Typical budget manual may include the following: a statement regarding the objectives of the organization and how they can be achieved through budgetary control, a statement about the functions and responsibilities of each executive, both regarding preparation and execution of budgets, procedures to be followed for obtaining necessary approval of budgets. The authority of granting approval should be stated in explicit terms. Whether one, two, or more signatures are required on each document should be clearly stated. A form of organization chart to show who are responsible for the preparation of each functional budget and the way in which the budget are interrelated. A timetable for the preparation of each budget, the manner of scrutiny and the personnel to carry it out, the reporting of the remedial action. Question number 2. Brief about the difference between fixed and flexible budget. Fixed budget. It does not change the actual volume of activity achieved. Thus is known as rigid or inflexible budget. Whereas flexible budget, it can be recasted on the basis of activity level to be achieved. Thus it is not rigid. Fixed. It operates on one level of activity and under one set of conditions. It assumes that there will be no change in the prevailing conditions, which is unrealistic. Flexible. It consists of various budgets for different levels of activity. Fixed. Here all costs, fixed, variable and semi-variable, are related to only one level of activity. So variance analysis does not give useful information. Flexible. Here analysis of variance provides useful information as each cost is analyzed according to its behavior. Fixed. If the budgeted and actual activity levels differ significantly, then the aspects like cost ascertainment and price fixation do not give a correct picture. Flexible budget. Flexible budgeting at different levels of activity facilitates the ascertainment of cost, fixation of selling price, and tendering of quotations. Fixed. Comparison of actual performance with budgeted targets will be meaningless, especially when there is a difference between the two activity levels. Flexible. It provides a meaningful basis of comparison of the actual performance with the budgeted targets. Question number 3. Say the advantages of zero-based budgeting. The advantages of zero-based budgeting are as follows. It provides a systematic approach for the evaluation of different activities and ranks them in order to preference for the allocation of scarce resources. It ensures that the various functions undertaken by the organizations are critical for the achievement of its objectives and are being performed in the best possible way. It provides an opportunity to the management to allocate resources for various activities only after having a thorough cost-benefit analysis. The chances of arbitrary cuts and enhancements are thus avoided. The areas of wasteful expenditure can be easily identified and eliminated. Departmental budgets are closely linked with corporation objectives. The technique can also be used for the introduction and implementation of the system of management by objective. Thus, it cannot only be used for fulfillment of objectives of traditional budgeting, but it can also be used for a variety of other purposes. Question number 4. Discuss feedback control and feed-forward control system of budgetary control. Feedback control. In the feedback system of budgetary control, the actual results of the budgeted period are collected and combined with the budgeted figures. The exercise of variance identification is done after the completion of budgeted period. The variants are reported and based on the report corrective actions are taken. Responsibility is fixed and based on experience modification in future targets is implemented. As the name suggests, it is a ex post corrective control system of budget. This system of budgetary control is common organizations where management information system, that is MIS, is not so robust and where data is obtained only after the finalization of books of accounts. Though this type of control system is less expensive to maintain but has limitations. Feed forward control. This is the opposite of feedback control system of budgetary control. It is ex ante preventive control mechanism of budgetary control. The budgets are set at the inception of the budgeted period and the actual results are continuously monitored and compared. The targets are kept realistic as far as possible and the targets are reviewed and reset if necessary. The budgetary control system requires a robust MIS supported by integrated ERP system enabling the entity to get data as and when desired basis. This system is very expensive and beneficial for the organization where the business environment is dynamic and information has important role in getting edge in the competition and today's data warfare. Last chapter, chapter 15, cost accounting system. Question number 1. Briefly explain the essential features of a good cost accounting system. This is also an important chapter. The essential features which a good cost accounting system should possess are as follows: informative and simple, accurate and authentic, uniformity and consistency, integrated and inclusive, flexible and adaptive, trust on the system. Total 6. Informative and simple, accurate and authentic, uniformity and consistency, integrated and inclusive, flexible and adaptive, trust on the system. We'll elaborate. Informative and simple. Cost accounting system should be tailor-made, practical, simple, and capable of meeting the requirements of a business concern. Accurate and authentic. The data to be used by the cost accounting system would be accurate and authenticated. Otherwise, it may distort the output of the system and a wrong decision may be taken. Uniformity and consistency. There should be uniformity and consistency in classification, treatment, and reporting of the cost data and related information. This is required for benchmarking and comparability of the results of the system for both horizontal and vertical analysis. Integrated and inclusive. The cost accounting system should be integrated with other systems like financial accounting, taxation, statistics, and operational research, etc. to have a complete overview of clarity in results. Flexible and adaptive. It should be flexible enough to make necessary amendment and modifications in the system to incorporate changes in technological, reporting, regulatory, and other requirements. Trust on system. Management should have trust on the system and its output. For this, active role of management is required in the development of such a system that reflects a strong conviction in using information for decision making. Question 2. Following whether to be shown in cost accounts or financial account. Classify them. Preliminary expenses written off during the year. Financial accounts. Interest received on bank deposit. Financial accounts. Dividend interest received on investment. Financial accounts. Salary for the proprietor at notional figure, though not incurred. Cost accounts. Charges in lieu of the rent where premises are owned. Cost accounts. Rent receivables. Financial account. Loss on the sale of fixed asset. Financial account. Interest on capital at notional figure, though not incurred. Cost accounts. Goodwill written off. Financial accounts. A notional depreciation on the assets fully depreciated for which the book value is nil. Cost accounts. Any notional nature items are cost accounts. Opportunity cost is only considered in cost accounting system. Question number 3. Like other branches of accounting, cost accounting also has limitations of cost accounting. Expensive, requirement of reconciliation, duplication of work. 3 things. Expensive, requirement of reconciliation, duplication of work. Expensive. It is expensive because analysis, allocation, and absorption of overheads requires considerable amount of additional work and hence additional money. Requirement of reconciliation. The results shown by cost accounts differ from those shown in the financial account. Thus, preparation of reconciliation statements is necessary to verify their accuracy. Duplication of work. It involves duplication of work as organization has to maintain 2 sets of accounts, that is financial accounts and cost accounts. Question number 4. Is reconciliation of cost accounts and financial account necessary in case of integrated accounting system? Explain. In integrated accounting system, cost and financial accounts are kept in the same set of books. Such a system will have to afford full information required for costing as well as for financial accounts. In other words, information and data should be recorded in such a way so as to enable the firm to ascertain cost. It also enables the ascertainment of marginal cost variances, abnormal losses, and gains. In fact, all information that management requires from a system of costing for doing its work properly is made available. The integrated accounts give full information in such a manner so that the profit and loss account and the balance sheet can be prepared according to the requirements of law, and the management maintains full control over the liabilities and assets of its business. Since only one set of books are kept for both cost accounting and financial accounting purpose, so there is no necessity of reconciliation of cost and financial accounts. Question number 5. Discuss the impact of information technology in cost accounting. The impact of IT in cost accounting may include the following. After the introduction of ERPs, different functional activities gets integrated, and as a consequence, a single entry into the accounting system provides custom-made reports for every purpose and saves an organization from preparing different sets of the document. Reconciliation process of results of both cost and financial accounting system becomes simpler and less sophisticated. A move towards proper paperless environment can be seen. Third one, information technology with the help of internet, including intranet and extranet, helps in resource procurement and mobilization. Fourth one, cost information for a cost center or a cost object is ascertained with accuracy in timely manner. This process automates the cost accumulation and ascertainment process. Fifth one, uniformity in preparation of report. Budgets and standards can be achieved with the help of IT. ERP software plays an important role in bringing uniformity irrespective of location, currency, language, and regulation. Cost and revenue variance reports are generated in real-time basis, which enables the management to take control measures immediately. IT enables an entity to monitor and analyze each process of manufacturing or service activity closely to eliminate non-value added services. Question 6. Explain what are the essential prerequisites for an integrated accounting system. Essential prerequisites. The management's decision about extent of the integration of two sets of book. Some concerns find it useful to integrate up to stage of prime cost or factory cost, while other prefers full integration of entire accounting system. A suitable coding system must be made available so as to serve the accounting purpose of financial and cost accounts. An agreed routine with regard to treatment of provision for accruals, prepaid expenses and other adjustments necessary for preparation of interim accounts. Perfect coordination should exist between the staff responsible for the financial and cost aspects of the accounts and an efficient. Question 7. Narrate the objectives of cost accounting system or describe the main objectives of introduction of a cost and management accounting system in manufacturing organization. The main objectives of an introduction of cost accounting system are as follows. Ascertainment of cost. The main objective of a cost accounting system is to ascertain cost or cost for cost objects. Costing may be post completion and continuous, but the aim is to arrive at a completion and accurate cost figure to assist the users to compare, control, and make various decisions. Determination of selling price. Cost accounting system is in a manufacturing organization enables to determine desired selling price after adding expected profit margin with the cost of the goods manufactured. Cost control and cost reduction. Cost accounting system equips the cost controller to adhere and control the cost estimate or cost budget and assist them to identify the areas of cost reduction. Ascertainment of profit of each activity. Cost accounting system helps to classify cost on the basis of activity to ascertain activity-wise profitability. Assisting in managerial decision. Cost accounting system provides relevant cost information and assists managers to make various decisions. Advantages of integrated accounts. No need for reconciliation. Less efforts, less time consuming economical process. No need for reconciliation. The question of reconciliation causing profit and financial profit does not arise if there is only one figure of profit. Less effort. Due to use of one set of books, there is significant saving in the efforts made. Less time consuming. No delay is caused in obtaining information as it is provided from the books of original and economical process. It is an economical also as it is based on the concept of centralization of accounting function. List out 5 purely financial expenses that are included only in final accounts. Interest on loan or bank mortgages, expenses and discounts on issue of shares or debentures, other capital losses, that is loss by fire not covered by insurance, losses on the sale of fixed assets and investment, income tax, donation, subscription, expenses of the company, share transfer, office fee. അപ്പോൾ എല്ലാ ചാപ്റ്ററും കഴിഞ്ഞു. ഓൾ ദ ബെസ്റ്റ്. എല്ലാവരും നടത്തണം.